evening, good afternoon, and welcome to the Booms and Bus Show. My name is Jonathan Davis, and we have had Westminster, Manchester, and London again, and the politicians, of course, jaw rather than actually do anything. There was a cartoon I saw of the cabinet and the defence chiefs and the police chiefs and whatever, Crested Dick, incredibly appropriate name, at the Cobra meeting, and there was a huge elephant in the room that no one was talking about. The Quran, if you look into these things, is vicious and murderous. And it tells them to kill the non-believers, the kuffar. It also tells them that they can't talk about it. They can't talk about how nasty it is. Look, we have the laws to deal with it before it happens. Why on earth are we not banning the hate speeches? Why are we not jailing the hate speakers? I don't understand. Perhaps someone could help me out on that. That is something we absolutely have to do. I don't understand why the police everywhere are taking to task so-called Islamophobes who I see as patriots and just trying to stand up for our society, when they're actually standing in front of the hate speakers who are speaking the hate and the murdering right in front of them. I don't get it. What on earth is going on? And of course, Theresa May and Jeremy Corbyn and all of them lying through their teeth. Why? Because they then shake hands with the Palestinians, with the Saudi Arabians. They sell them tens or hundreds of billions of dollars of arms and so on. And just as an aside, you'll have seen this nonsense. I'd love to know what on earth is going on with these several Middle Eastern Arab countries putting a wall up against Qatar, which, by the way, owns half of the FTSE. Well, slight exaggeration, but you get my point. It's a very interesting thing because Gaddafi started selling oil in euros, or more to the point, stopped selling it in dollars. Saddam Hussein stopped selling oil in dollars. We know what happened to them. And literally a month and a half ago, the largest producer of natural gas in the world, or maybe it's the largest reserves, can't quite remember immediately, Qatar has said that they're going to start selling gas in Chinese yuan. Coincidence? I'll let you make up your mind. There's nothing more to say on that. Ban the hate speeches. Jail the hate speakers. Sorry, there is one other thing. Put the Islamophiles on the air 24/7. Let everyone hear the fascistic, misogynist, homophobic, brutal, medieval crap. Then we might get voters seeing the error of their ways. Talking of which, there's some rubbish going on Thursday in the United Kingdom And there was a flurry when, who was it, YouGov came out with this hung parliament poll nonsense. I can also quote to you electoral calculus, 98 Tory majority, Fisher et al. Combined 100 majority, Nigel Marriott 109, Comres 100 plus, Ashcroft 142. The bookies have got the Tories on odds on 1 for 3 to win. There's no way on earth that the Tories are going to win with anything less than a significant, very significant majority. There's no question. Giving the YouGov airtime is just these media idiots filling up space. It gives them something to talk about. But, you know, as I wrote to clients just yesterday, as it happens, and the reason why I keep saying to you, forget about voting for these con artists. They don't give a damn about you or me. There is no material difference between the so-called left and right. They are all shills for the global elite and the global banking cartel. I ask you to remember again who bailed out the bankers in 2008 and 9. And I ask you again, who has borrowed more than Gordon Brown from 2010 to 2017? There is no flaming material difference. Of course, there are differences in the minutiae, but ultimately, in the big picture, you've got these Bilderberg type people pulling on the strings. It's like that scene with the puppets in The Sound of Music. And you've got the big people on the top behind holding onto the strings and moving the characters around. That's what's going on, folks. And when you get that, it's interesting how much then becomes crystal clear. The Booms and Bust show is not some right-wing ideology. It's about free markets and capitalism, which is not the right wing. The left wing is about statism and communism and socialism. The right wing, to me, is more about hard social policies, hard in inverted commas. But it's still about cronyism. It's still about helping the big guys to the detriment of the little guys. It's exactly the same. And by the way, the socialists don't help the little guys. That is an absolute lie. Who was it that basically told everyone to borrow like heck from 1997 to 2010? In 7 years, the amount of household borrowing in the UK after 1997 trebled. And who told the banks to lend as much as they want? Don't worry about it, boys, because when you go bust, nudge, nudge, wink, wink, I'll sort you out. And he certainly did. The son of the minister. So there's no difference. I urge you again to spoil your ballot. There's no point voting for these guys. I might put a caveat on that, okay, in order to absolutely guarantee us getting out of the EU. But I'm telling you, we still don't know if May is true to her word. She's lied through her teeth throughout her whole career. How suddenly is she going to be an honest person? She is not Margaret Thatcher. Enough politics after 10 minutes. Let's move to economics. But just to remind you, if you want to contact me, please do. On Twitter, @BoomsBustsShow. On the email at jd@theboomsandbustsshow.com. I want to thank, I think it was Malcolm, I'm not sure, I apologise if it wasn't. I want to thank you for giving me the idea to look at Corbyn's economic policies and how they're going to totally annihilate the UK economy. I set him right. As if the Tories have got a better idea. I remind you, Osborne and Hammond borrowed more than Gordon Brown. Enough said. There's no blooming difference. What's going to happen in the economy is going to happen irrespective of who's in number 10 or the White House and so on. We haven't had a recession since, of course, 2008. You know what, listener? We're due one. It's a simple economic historical fact. After a change of a two-time, or as I say, two-timing president, since 1910, I remind you, there has always been a recession within about 12 months of the inauguration of the new president. The only exceptions were it was a single term president being changed. And here we are in 2017. The debt is vastly higher. We've got lackluster economic growth. We've got the car market falling to pieces. And indeed, in the UK, even before the recession looks as if it's looming. I read today that average rents in the UK fell an enormous 3% in May, and indeed are down year on year. Now it's only a fraction of a percent they're down year on year, but clearly we've had a number of months of falling rents, and yet we don't have a recession, and yet we have the lowest borrowing costs in history. And buy-to-letters are selling up, and yet we've got falling rents. And the reason why we've got falling rents is because we've got falling house prices. And this is before the recession. We are in a 30-year economic depression. And people don't realise that you can have economic growth in a depression. Sounds strange, I know, but a depression is not the same animal as a recession. Everybody knows that a recession is defined by 2 consecutive quarters of a falling economy. But there's no specific economic growth or fall definition for depression. It is merely this, and in fact, it comes from John Maynard Keynes. From his 1936 treatise, General Economic, look it up. The general would, I can't remember the title of his tome. But the definition is an extended period of slow or no growth. We've just had 9 years of about 1% on average economic growth. And that's with the biggest economic stimuli literally in history. $20,000 billion of central bank purchases of financial assets. the lowest borrowing rates in human history, stretching back to ancient Greece. And all they can get is about 1% per annum growth. And that's before we go into the next recession, which all I can say is looking more and more probable. We're going to see the economic peak sometime this year, which means by definition we go into recession when we'll probably lose 5%, maybe even 10% of the economy. Now you balance that off with the only several percent rise in the economy over the last 8 years, obviously following the big fall in the economy in 2008. So from 2008 to say 2019, I will wager you that the economy net falls over an 11-year period. And then we're going to do it all over again for the following 10 years. Lackluster growth because of huge debt, blah, blah, blah. House prices falling. Wages not keeping up with whatever inflation there is. Unemployment soaring. Home repossessions. Bankruptcies. This is a 30-year economic depression, and that is why you can get economic growth in a depression. In the 1930s, most of the decade of the 30s was economic growth, but it was obviously an economic depression. Wake up. This is what Labour and the Tories, the Liberal Democrats, the Greens, the Socialists, the Communists, the cronies, this is what all the politicians, the kippers, do to us. Don't say to me that the kippers would sort out the problem. Don't say to me that the kippers are capitalist and free market. There isn't a single policy in their manifesto about the big issues. Just like the rest of them, it's all minutiae. China. The first chart there that is attaching to the tweet of the iTunes announcement of the show is that the manufacturing index is at 49.6. Above 50 is expansion, below 50 is contraction. Okay, it's only very mild contraction. But look, it's actually been net flat now for 5 years. Chinese manufacturing hasn't grown in 5 years. Now, as important as China is manufacturing wise, actually it's only now about 35% of the Chinese economy, which means that increasingly, like the West, the majority of the Chinese economy is now services. Now, where we are, and in most of the West, you're talking in excess of 80, maybe even 85% is services. In China, it's 65%. However, 35% of the second largest economy on the planet hasn't budged in 5 years. Now, I talked a few weeks ago about the vast numbers of retail store closures in America. And there's a chart there of the unit closings for each of the years in the US, stretching back to the year 2000. And for 2017, it is, of course, an estimate, but it's based on what the companies themselves have said they're going to close. The biggest number of store closures in the 2000 to 2003 recession, the dot-com crash, was in 2001 when 4,500 stores were closed. In 2008, we had another peak of closures, 6,200 stores closed. Do you see a recession? Because I don't see one, and yet chief executives of American public companies have already told us this year they're going to close 8,500 stores. Retail in America is toast because the 70% of the American economy, the consumer, is toast. Because for 30 years, they've had practically no wage rises, and they've instead been keeping themselves afloat by more and more debt. Well, it seems to me that can has been kicked as far as it can be. I will link also to a very interesting article in the New York Times about a particularly fashionable street in New York, which started off just by having a fancy cookie or cake shop or something like that, I can't remember, and suddenly so many fashion chains opened up stores in this long street. At one point, I think it was Marc Jacobs, I read, had 6 franchises on this one street. The whole street is now empty of retail. This is the most astonishing thing. And I repeat, have you seen a recession yet? Debt. The next chart is the top 20, if that's the right phrase, of state-owned, state-held debt as a percentage of GDP. Right at the top, Japanese government debt is 2.5 times the size of the economy. For pretty well, all of those countries, I'm just quickly looking at all of those countries, maybe not the bottom 2 or 3 or 4, but even then, it's mathematically impossible now to pay down this debt, to pay it off. It's not going to happen. In Japan's case, remember, 27 years ago, Japan was the second largest economy on the planet. It's now still, I believe it's the 4. Let me think. America, China. The third must be Germany. So Japan is still the 4th largest economy on the planet, dropped down 2 places in a generation. But of course, it's printing money hand over fist. On a per capita basis, it's printing money, which of course becomes debt for society, at 3 times the rate at which the West has been printing money. 3 times. I mean, it's just insane. Well, of course, it's not insane. It's politics. And of course, what's going to happen in Japan is at some point, they will be printing money with abandon, very much like Venezuela, Zimbabwe, Israel, Weimar. Currently, 5 years ago, 25 years ago, and 90 years ago. And that will set off Japanese hyperinflation. We know what will happen to the economy in that circumstance. And unfortunately, we probably also know what will happen politically in due course. United States, 105%. of GDP. United Kingdom, 89%. We're all basket cases. We're all bankrupt. Greece, 177% of GDP is debt. Yeah, that'll go the way of Japan. No question. It already is. I was asked by an apparently intelligent investor, a professional investor indeed, a couple of weeks ago when I said I was investing in Greece. He said, but surely Greece is bankrupt. And I said to him, and I looked at him and I thought, you're a smart guy and you're a professional investor. How can you be so bloomin' stupid? I said to him, tell me a country which isn't bankrupt. He couldn't think of one. And yes, by the way, I'll be talking later about the Greece market. It's been a sight to behold, seeing the rise in stocks over the last year or so, although they haven't really done much over the last few months. But I can tell you that it's largely been led by the EU, and in particular the European Central Bank handing vast amounts of money to the likes of Deutsche Bank, the Italian banks, the Greeks, and so on. And you'll remember recently the Italian banks were just about to go under. And before that, Deutsche Bank, the largest bank in Europe, was just about to go under. Well, we're getting bank bailouts again. Monte Paschi, Banca Monte dei Paschi di Siena, the oldest still working bank in the world, is being bailed out yet again. The thing is, if they don't bail these banks out, then that's it. The spider's web gets a butterfly 8,000 miles away, flaps his wings, and the spider's web, by that electric shock, just blows apart. So, they cannot let these banks fall apart. It's totally corrupt. Totally 100% corrupt. I'll tell you what, though. Something is going to happen that they don't know about. You think they knew enough about 2007 and 2008? They didn't know enough. They will never know enough, because they are deeply arrogant people. You want to know about all this money printing and how crap it is? From 2008 to 2016, America created jobs. 6.7 million jobs. And each job cost $20 million. You can see it on the chart there. And even with that, look on the far right-hand side. They have got some PhD economists who work out the unemployment rate. And of course, they're not counting the number of people signing on and all this kind of stuff, and the number of people in the population on the census. No. They have a thing called the birth-death adjustment model. they make it up. 93% of the new jobs reported and 40% of the jobs in 2016 alone were added through an economist's quill pen. I'm telling you, all the money has gone to the top, certainly 0.1%, maybe the top 1%. But that's where all the money is gone. And if you have any illusions whatsoever that the bottom 90% are going to be okay 20 years from now, you are in bloomin' cloud cuckoo land. Get yourself sorted. And I've given you lots and lots of ideas as to what to do. Above all, get out of debt. There's a chart of the central banks printing money. The central banks basically had no printed money on their balance sheets at the turn of the century. It's gone up 19-fold, from 1 trillion to 19 trillion in 17 years. And that money has gone right to the top. Capitalism is what we're about. And there you can see, we've had capitalism for the last, we've had some form of capitalism for the last 100 years, 150 years you could say, and look at the percent of people in extreme poverty. It's gone from the 90s% to the under 10%. Child mortality rate gone from 40-odd% to under 5%. Percent of people living in democracy has gone from 1 or 2% to 50-odd%. Literacy rate has gone from 10-15% to 80-85%. I am fearful that over the next 20 years, we will see all that flatten out and indeed fall slightly. And then over the following 50 to 100 years, it'll all totally reverse. You think I'm joking? I am not. Yeah, what's next? Markets. Where are we? 33 minutes. Good. We've got a good time to talk about markets. US natural gas. The chart I want you to focus is on the one on the right, where US gas demand over the next 3 years is going up 12-fold. But US natural gas supply from US oil wells is going up 5 or 6-fold. Now I can tell you from what I read that the pipelines transporting this gas around America to fill up the LPG trucks, the vast amounts of numbers of trucks running on LPG now in America. Practically every fleet is on LPG. The vast number of factories running on LPG. The homes that are heated on LPG. This is why demand's going to soar over the next few years. But the pipelines, I'm telling you, there is such a fine supply-demand balance. And in each of the last 3 years, they've had 3 of the warmest years on record. All America has to have is a normal temperature year, and demand will be massively outweighing supply. What's going to happen to the price of US natural gas? What's going to happen to the price of companies that get the thing out of the ground and sell it? Buy it while it's dirt cheap, listener. Uranium. There are 3 charts there. You can see that the reactor requirements in light grey are rising over the next, 15 years. You can see that production is flat, was flat up until recently. But you can see, therefore, that there's going to be a rising gap between production and demand filled by secondary supplies, which basically means imports of nuclear power. And also, by the way, the old nuclear weapons in the Soviet Union, they're being dismantled, decommissioned, and that's producing uranium as well for the reactors. 60 nuclear reactors are under construction right now, and as the guy says there, they're not going to run on fresh air. Uranium prices need to reach $40 before we see the new production of uranium hit the market. The price is too low. It's had a massive crash. It's had a bit of a rise in the first 2 or 3 months in 2017. It's had a pullback. Buy it when it's cheap. Put it away, forget about it. Greece, lovely chart, beautiful chart. Greece, that everyone knows, is in a state of bankruptcy and will be for the next 50 or 100 years. Everybody knows it. I'll tell you what everybody doesn't know. The market's up 70% since January 16. It's a very strong chart. Mr. Market, as in global finance, is buying Greece hand over fist. The smart money is moving in. You get the smart money first, then you get the professional money, as in the sovereign wealth funds, the pension funds, and so on. Then you get retail. And the rate of ascent starts slowly, it speeds up, then retail, it goes into a crescendo. That's the investment cycle. I suggest you pull up that chart, look at it over since 2000 or even 2007. You will see how absolutely dirt cheap Greece is. Buy it, lock it away, forget about it. Oh, and by the way, not that Greece will ever leave the Eurozone. If they do, well, why might they? Well, we need to listen to my esteemed political advisors, the Eagles and Hotel California. You may check out, but you can never leave. It's most unlikely that Greece will ever leave the EU and the euro. If it does, and they go back to the drachma, yes, all assets held by foreigners will immediately go down big time. But Greece will then import super, then hyperinflation, and it will go straight to the stock market. If they do ever leave, and they do go back to the drachma, and it does fall 50 to 90%, I would treble or quadruple your investment. Oil, very interesting, very important, of course, to the global economy and whether or not we're in inflation or deflation. There is a chart stretching back 2 or 3 decades, and you can see that where oil is about now, at the low 40s, it's at a major point over the last 20, 30 years. $40 is a hugely pivotal point. And it seems to me that oil is on a rising trend. It's going back down to 40. I think I said this last week or 2 weeks ago. It's going back down to 40. Sure, if it breaks the high 30s, then it's going back down probably to, well, it might even go to the teens. It would be that bad. That bad for the global economy, because that means we're in recession, but that great for everyone, because we'd have much cheaper fuel costs. Not that the fuel companies, apart from at the forecourt, not that the energy companies would pass on the reductions. Of course they wouldn't. We're talking fascism. However, it seems to me that $40 is going to be held, and it's going to go back up to the blue line, which is going to come down to about $70. Now, at 70, we'll see what happens there, or in the 65 to 70 level, we'll see what happens there. But I do see that's what's going to happen. The CRB is the commodities index, and actually it's heavily oil weighted. But look at the CRB index. Again, this is over the last 26 years. That's a generation. That's long enough to get a feel for the validity of the chart. The CRB against the S&P 500, it's the lowest ever. The ratio of the CRB to the S&P in red. It's at a ratio of merely 0.07. Now, the black line is the S&P. We don't need to know that. All we need to know is that the commodities index is at the lowest ever against developed market stocks. The S&P as a proxy for developed market stocks. If we go into recession, yes, there could easily be another lurch down in commodities, etc. But on a long-term view, it seems to me this is dirt cheap. Home prices in America. This is showing the percent in various conurbations in America, the percent of home prices in those areas above or below the prior peak. And you can see Denver and Dallas and Houston. I said last week the Texan Mexican Midwest Belt Corridor. Incredible economic strength. I wouldn't be surprised if that's the next China. I'm not surprised at all to see Texan house prices way above the prior peak. Not surprised at all. And yet, where's oil? It's interesting, isn't it? And then you look at Vegas, Florida, Chicago. They're still double digits lower than their, no doubt, all-time high price. Very, very interesting. I talked about UK house prices and rents earlier in the show. Commercial property, some years ago, some bright sparks set up investment funds and called them REITs, real estate investment trusts. There is a chart of shopping centre REITs, the share prices since the beginning of the year. They're down 20%, more than 20% this year. What's that? 5 months. Of course they are. Companies are closing stores hand over fist. Something is afoot. I was having an email chat with a mate of mine in Australia. All right, RG, how you doing? And he's sending me lots of lovely articles of big buy-to-letters and property developers in Australia, which hasn't had a bust. These people going bankrupt. They showed a 20-somethings couple who had umpteen properties. They're going bust to the tune of $3.5 million after the properties have been sold. And of course, their caption that they're quoted as saying, "It's brought us closer together." I have zero sympathy for you arrogant, hubristic, stupid, you egomaniacs. All you wanted to do was show off. I saw the other articles about you saying you took 6 months holiday, you travelled the world. Aren't you amazing? I've heard it time and time again of buy-to-letters who saw it as a license to print money, and it could never fail. It's never going to happen. Huh. This time it's different, eh? No, this time it's different. It's never different in the investment world, and no asset is ever different. It's just an investment asset. No doubt the Australians are at the denial phase. In the West over here, or in the Northern Hemisphere West, we're not even at the denial phase. We're still heading from thrill to euphoria. There is question, there's mild concern. People aren't getting wage rises. They're doing double shifts just to make things, just to keep the plate spinning. But you don't hear about that. You don't hear about the underemployment, people doing 2 jobs. You don't hear about them then going into their Uber taxis, do you? You don't hear about the cash and hand work, do you? We're not even at the denial phase. I'll tell you the phase in the grief cycle: denial, anger, depression, acceptance. The one I'm most looking forward to is anger. I can just see the people at my tennis club talking angrily. The government should do so. The government should never have allowed this to happen. The government, the Americans, the Chinese, the Russians, the Arabs, the Jews. It's always someone else. The terrorists, the Islamists. It's always someone else. They will be so angry. And I don't mind admitting, I'm so looking forward to seeing it with my own eyes. Lots to say, and it's been said. Do please talk to me on Twitter at Booms Busts Show. Please retweet the hell out of the show. Retweet the hell out of my Twitter account, of the Booms and Bust Show Twitter account at Booms Busts Show. I cannot believe that only less than 200 people follow the Booms Bust Show on Twitter. It's a joke. And email me at jd@theboomsandbustsshow.com. A fine gentleman gave me his financial details to use as a financial planning exercise in the show. Thank you very much. No names, no pack drill. I shall indeed do so. But there's so much else to talk about. That's my problem. The quote of the week is how we end the show. And at the end of the quote, I shall tell you who said it. I'm going to take a drink of water. Quote: "What is wrong with inciting intense dislike of a religion if the activities or teachings of that religion are so outrageous, irrational, or abusive of human rights that they deserve to be intensely disliked?" Unquote. Rowan Atkinson. Ladies and gentlemen, listener, I'll see you next week.